Hey everybody, I'm here with Rick Rule. This is one of I've looked up to him for so long and I've learned so much from him. I'm so glad I've been able to do this. And today the CPI came out and it was hotter than they expected, which most of us knew that was probably the case. And I think I quote, correct me if I'm wrong, the Fed's gonna chicken out when they're not gonna be able to do what they think they're gonna do. And they're going to have to pivot a little earlier than they would expect. I don't want to ask you any crystal ball questions, but we're going into this environment. I'd really like your take on it.
Well, the caveat is I'm not an economist. I'm a credit analyst by background. I look at an economy that seems to me to be driven more by monetary policy than anything else. I think that some of the relative good times that some of us have enjoyed in this economy is more a function of cheap credit and abundant credit than it is increases in productivity. And I wonder about the economy's continued resilience in the face of increased interest rates. I wonder too about the impact of increased interest rates on long bond markets. The difficulty that the Bank of England is having right now is an example with the disintermediation from long bonds among big institutions. If you allowed a regime right now of free market interest rates, if you reverted to mean in terms of the real interest rate, traditionally the US 10-year Treasury has had a positive real yield to inflation. If the CPI number is 8.99, that would suggest a 10-year Treasury that would have a 10 handle on it. Traditionally, the 30-year fixed mortgage has traded at a premium to the US 10. That would take the yield on the US 30-year fixed to something like 11. I don't think that...
By December.
I don't think that the US economy would handle that easily. I think it would be a wonderful thing to have happen, but I don't think it will happen. And I think as we experience the difficulties that accompany higher interest rates in the economy, that the voters will put pressure on the political class and the political class will cave and the Fed will have to pivot. I'm sorry for that long-winded answer. But
No, it's perfect. I agree with him 100% on most everything he says. I don't really know of anything we disagree on. But when they pivot, so we're here at the conference and there's a ton of mining. Every time we go somewhere, there's a lot of mining people. They're mining, a liar standing next to a hole in the ground. And I hate to talk about people like that, but it seems like it could possibly be the case. As we get into this, and my wife sells precious metals for Miles Franklin, and Shakeman's a good friend of mine, and we're starting to see 30 and 45-day waiting periods on precious metals. Is that, in your opinion, so a lot of times when demand picks up, they cut supply to drive prices. Have you noticed that before in precious metals?
Yes, but I don't think that's what's happening right now. I think that the precious metals industry, in particular the fabricators, first of all had COVID-related shutdowns for a couple of years running. There wasn't the ability in Switzerland, as an example, to take kilo bars down to 100-gram material because of COVID. Then what happens is I think that the value chains in bullion around retail products didn't anticipate the demand that we're having. I don't see anything intentional in the reduction of retail supplies. I just see an industry that didn't understand or estimate the amount of retail demand that we're seeing around the world, but particularly in India. We think of the gold and silver prices in US dollar terms. If you think in other terms, if you think in other currencies, if you think in rupiah or pound sterling or dollars or yen or yuan, the dollar's in a raging bull market. It's in the United States that it feels price constrained. And it's important when you think about the efficacy of retail purchase of gold and silver that you don't just think of it in US dollar terms, because a lot of metal, a lot of retail quantities of metal is going to places like India and Pakistan and Turkey.
India, they just opened their bullion exchange, right? And when they did that in Shanghai back in the 20 teens, and China. And I want to say they started receiving about a third of the global gold supply. That should also really be that should help gold tremendously.
If the Indian government has the good sense not to tax the bejesus out of precious metals, the Indian government, like our own government, makes a really bad decision about every 6 weeks, you know? I remember I've got some friends who are Gujarati. They call themselves traders. The government would call them smugglers. And when the Indian government put a 15% excise tax on gold, I asked these guys, well, what did that do to your business? They said, oh, it's fantastic. It cost us 2.5% bribe to get the gold into India, and we got a 15% floor. Couldn't be better. So what you talk about in terms of liberalizing the precious metals markets in India could have a spectacular positive effect, because there's a cultural affinity in South Asia for precious metals, one that we don't have here. The question will be, does their government get in the way, and if so, how?
Okay, so it's like, it's about like I thought, really. It's interesting. So it really should. Am I right on that though? About Shanghai receiving about a third of the global supply?
Well, not just Shanghai. It wasn't just in Chinese retail. There was Chinese institutional demand, including Chinese government demand. So if what you're talking about is simply the opening up of the Chinese market to bullion, that wasn't wholly responsible for it. The difference was that the Chinese government wanted to channel Chinese private retail savings into a variety of instruments, including gold. They encouraged it.
Okay, yeah.
My suspicion is that the Indian government, because they don't enjoy as much foreign exchange surplus as the Chinese, will continue to want Indians to invest in Indian government securities. So I think there may be a difference. I'm making this up, by the way, but I think there may be a difference in policy orientation between the two countries.
Sure, nobody's got a crystal ball, nobody knows what's coming, but we have clues, right?
Right.
We got clues, and we're trying to do our best to get through it. And so you've got governments, you've got, I tell people about precious metals, and a lot of people just don't really get it, but the ones that do are watching us. When supply runs thin, what's the first clue? Because I know from listening to you, you got to experience some really fun times.
I did.
In the precious metals bull market, the last one. And we're kind of looking for that again. Mm-hmm. You know, I think you've got one last good, probably blow the top off of everything run. What was the first clue?
Well, I gotta say, my first bull market was in the 1970s. And I was young enough and inexperienced enough that I didn't know what to look for. I was, even then, philosophically a gold bug. But the upside that occurred in gold caught me completely by surprise. I mean, completely by surprise. I was a youngster, so I got ambushed by it. The move that I got right was 2002. I watched gold begin to move up in 2000. Gold was doing well in every currency in the world, except the US dollar, because the US dollar was strong relative to everything else, And then there was a malaise in 2001, and the market got disgusted with gold. And then in 2002, the US Treasury backed off higher interest rates in the United States. And gold just ripped. At that time, I was ready.
Right.
That time I came to understand that gold does well during periods of time when people are concerned about the maintenance of their purchasing power in US dollars. I don't think even today, the length and breadth of America, that the citizenry are concerned about the maintenance of their purchasing power in US dollars. They think that because the currency is the strongest in the world, the country is the strongest in the world. And it may be relatively strong, but I don't see it as absolutely strong. And what I see now is a circumstance where negative real interest rates, debt and deficits, and the fact that gold is in a bull market in every currency in the world, except perhaps the Costa Rican currency and the United States, means that it is more likely than not the gold will do well.
Yeah, I agree with you 100%. Well, guys, I'm not going to keep you that long. My filming equipment is about to run out of battery, but I want to thank you for coming on.
Pleasure.
And I enjoy everything you have to say. So, guys, have an awesome, awesome day. We'll catch you in the next one later.